Welcome to Fear and Greed Q&A, where we ask and answer questions about business, investing, economics, politics and more. I'm Michael Thompson, and today it is all about property. House prices in Australia's capital cities are rising at their fastest pace in nearly 4 years, according to Domain's September quarter house price report, which is out today. Records are being set in Sydney, Brisbane, Adelaide and Perth, and Melbourne's growth is accelerating or re-accelerating. Dr. Nicola Powell is the Chief of Research and Economics at Domain. Nicola, welcome back to Fear and Greed Q&A.
Hi, Michael. Thanks for having me.
Now, we previously, and we've talked in the past about where we had a 2 and a 3-speed market at one point there, where we had kind of the mid-tier cities climbing so fast, a lot faster than, say, Sydney. We had Melbourne going backwards. Are we now seeing a levelling out here, or at least more consistency within the growth?
It is an interesting question because I think what we've got now is all capital cities are rising. That is, apart from Canberra units, that's the only one that kind of bucked that trend. But we have got this kind of unison of uplift, which we weren't seeing previously. There was much more stagnant conditions in some of our other capital cities. The way I would describe it now, though, is prices are rising across all of our cities, but we're starting to see growth diverge. So we're seeing some of our cities, so we know that Perth, Adelaide, as an example, were the overperformers. They continue to see strong rates of growth. They are still growing, but they're losing a little bit of momentum. So they're growing at a slower pace than they once were. But as you mentioned in your intro, you've got other capital cities that are now reawakening. They're reemerging. Sydney and Melbourne are the two that jump out, where they've seen the strongest growth. For Sydney, it's the strongest growth in about 2 years. For Melbourne, it's the strongest growth in about 4 years. And we've seen an acceleration in Brisbane pricing too. So while we do have a unison in terms of uplift, I would say that growth is now diverging, and we're at slightly different stages of the property cycle depending upon which city you're in.
Okay, I want to take a closer look at a couple of the cities. Then we'll start with Sydney, because some of these figures are enormous. A median house price of more than $1.75 million. It was up 3.4% for the quarter. The thing that shocked me, though, was the forecast that basically at the annual growth rate, if that continues, Sydney will pass a $2 million median by 2027. And it got me wondering, can it keep going? Is there a limit? Is there a realistic cap at which prices just level off, or is it just the sky's the limit? It can just keep going.
Look, I don't think the sky's the limit. I mean, obviously, we continue to see prices rise faster than wage growth. Mm-hmm. So obviously wage income, disposable income is one of the things that does keep back the amount of price growth, that will hold back the amount of price growth that we have. But I think ultimately what you've got is Sydney is just, it's in a kind of league of its own. Affordability in Sydney is very poor. But what you do have is there is strong interest in Sydney, particularly from overseas buyers. There's limited homes that are oceanfront. They're always going to command a premium. You've got this huge premium for land in Sydney relative to other capital cities. And ultimately, the geographical boundary of Sydney, the way that the land makeup, it's locked, right? It's got Blue Mountains, ocean, national park. This limits the sprawl for Sydney, whereas Melbourne doesn't have that. And Melbourne's always going to have this edge of affordability because it can sprawl endlessly as long as infrastructure can keep up. But I think there's this element that continues to power Sydney along is people that have equity currently in their home. Big chunk of home owners already in the Sydney market, unlocking that equity growth that they've already seen. And that in itself helps to propel the market along too.
Okay. It really is quite an interesting scenario, as you say, about being landlocked, and it does limit the capacity for new supply. Can we talk about Brisbane then now being Australia's second most expensive city? Why? What is it really that's put the rocket under Brisbane's house prices over the last few years?
Brisbane has been quite a remarkable city to watch. You would know more than anyone, it wasn't that long ago where we had a significant oversupply of units in Brisbane.
Yes.
I feel that wasn't that long ago, but it has changed so dramatically. So Brisbane is now Australia's second most expensive capital city for the first time on record, both for house prices and for unit prices, which is a massive shift. Now, ultimately, Brisbane has a chronic undersupply of housing. ultimately building has not been able to keep pace of population growth. We know that it's got the games, so there's lots of infrastructure spending too going on. That creates jobs. I think the lifestyle jobs creation is drawing people to the region. But one way I like to look at it that really contextualizes the amount of population growth. In Queensland, we still have net interstate migration running 4 times faster than the 2010s. And we have net overseas migration on average running 3 times faster than the 2010s in Queensland. So, it's got strong rates of population growth still. And the thing with Brisbane, it's seen an acceleration of growth. So while we've got Adelaide and Perth seeing a deceleration, they're growing but not as fast. It's the opposite in Brisbane. It continues to push higher.
On the topic of Brisbane, what kind of impact does something like the Olympics have when you know that there is going to be a lot of spending in terms of infrastructure over the coming years? How much does something like that actually flow through to general property prices?
Look, it absolutely does. I think when you have huge amounts of infrastructure spending, facilities, amenities, the word I like to use is it leaves a legacy.
Yeah.
And I think that legacy is in the makeup of its housing, the makeup of the infrastructure, the amenities that are on offer. It changes the shape of suburbs. And I think that's exactly what we're seeing at the moment. I mean, Brisbane has a timeline, or Southeast Queensland has a timeline, and it has to deliver these projects by the time that the Olympics are here. And I think in terms of the infrastructure delivery, if one state or territory is going to be able to do that, it's going to be Queensland because it has to. So it is going to leave that imprint on housing. And look, if you want to know the impact of infrastructure uplift, we've got a piece being released next week around Sydney's Northwest Connect. So we've actually modelled the impact of price, and that will be an interesting one for us to pick apart maybe next week.
Absolutely. We'll keep an eye out for that one. Melbourne, just briefly, you have mentioned a couple of times the fact that it is re-accelerating. Now, we talked last year about the opportunities that existed in Melbourne, particularly, say, for investors, while prices were depressed slightly. Has the train left the station now?
Oh, look, it close to. It's only got $10,000 left and it's in a new record high, so fully recovered. Yeah. We knew that this recovery was going to be a slow one, and it has been. It has been more subdued, but only $10,000 separates Melbourne house prices from a new record high. They grew 2.2% over the quarter. It's a clear acceleration of growth, the strongest quarterly growth in 4 years, and we're expecting a new record for Melbourne to be achieved by the end of the year. I actually think Melbourne's a really interesting city at the moment because I think there's this element of urgency in Melbourne, more so than any other capital city. And that urgency is created by the value that it presents, and that value is being diminished as time ticks on. Buyers are realising that it's coming out in higher clearance rates, it's coming out on overall stock now reducing, and it's coming out in higher price growth too.
Okay, look, by going through a few of the different cities, we've actually kind of picked apart a few of the reasons why different cities are accelerating at different rates. But broadly, we know that some of the main drivers here, we've had 3 interest rate cuts, supply broadly is still low. Combined, I would imagine they would be the main driver. But what do you expect to see now with the government's expanded first home buyer scheme? It came into effect at the start of this month, so we're only kind of 3 weeks into it at this stage. Too early to say what effect it's having?
So the industry feedback so far that we're having is actually we've seen non-first home buyers actually fast track their purchase before the expansion. So those that are sitting below that property price cap, so investors or current homeowners that are wanting to purchase, say, below Sydney's property price cap, which was going to be expanded to 1.5 million, wanted to buy before the 1st of October.
So they're not competing.
So they're not competing precisely. Okay. So I think it did have an impact on other buyer segments earlier. And I think obviously now we're in that final quarter of the year. We've now got the expanded scheme in place. It is going to support buyer demand from first home buyers. It is going to support price growth. So it's another dynamic that is providing a little bit of an extra spark to housing momentum. As you mentioned, we've got that spark coming from greater borrowing capacities. And what you tend to see is a reduction in the cash rate is amplified through our big housing markets such as Sydney and Melbourne much quicker. And that's exactly what we're currently seeing. We've also seen a rise in real incomes, which I think is helping. We've still got a tight jobs market, and we've got a better sentiment. The outlook is better coming from Australians than it was 12 months ago. And that also helps to play out positively well. If sentiment is rising, we're not quite into positive territory, but it is rising, that tends to play out well for our housing market, and you see higher levels of turnover. So there's lots of things going on that I think individually are kind of driving a little bit more momentum into Australia's property.
All right, good place to leave it. Nicola, thank you for talking to Fear and Greed.
Thank you.
That was Dr. Nicola Powell, Head of Research and Economics at Domain. If you've got something that you'd like to know, something you'd like us to delve into, then send through your question on LinkedIn, Instagram, Facebook, or at fearandgreed.com.au. I'm Michael Thompson, and this is Fear and Greed Q&A.